Welcome to MarketSetup. I'm Swapnil, analyst by day at a mid-sized fund house, self-made investor by night. In this podcast, we study companies, decode quarterly results, and dig into valuations, all with one goal: to uncover real investing opportunities. If you like asking what's really driving this business, you're in the right place. Let's dive in. In today's episode, we're zooming in on a company that's quietly executing a massive transformation: Refex Industries. 5 years ago, if you mentioned Refex, people might have scratched their heads, or perhaps thought of refrigerant gases. But something dramatic has shifted. This company, once in chemicals, has rapidly diversified into completely different, often gritty sectors. And the big question for us today is Refex building a sustainable empire, or are its new foundations showing cracks? So what exactly is this transformed Refex Industries? How did a company primarily known for gases suddenly become a key player in heavy industrial logistics and green energy? It's a leap so profound it forces us to re-evaluate everything we thought we knew about them. Refex embarked on a powerful strategic shift, expanding well beyond its initial chemical roots. Its original refrigerant gas business, while still there, now plays a supporting role. The real action and the real growth is happening in its dramatically expanded portfolio of services. We're talking about 4 very distinct business lines. First and biggest is the rather unglamorous but incredibly crucial world of ash and coal handling for thermal power plants. Then they've made a bold entry into electric vehicle services. There's also the newly launched wind energy manufacturing segment. And finally, quietly chugging along is their power trading business. It's a portfolio covering everything from the dusty power plant floor to emission-free electric vehicles. This isn't just diversification, it's a profound strategic transformation that promises to reshape Refex's future. Now, you might be thinking, ash and coal handling, Swapnil, really? It sounds like the kind of business that belongs in an old textbook, not a growth portfolio. But here's the kicker. This segment now brings in over 90% of Refex's revenue. 90%! And they call it very high margin. Why? What makes managing industrial waste so profitable? And if it's so good, why aren't the big industrial players doing this themselves? Well, the truth is, handling ash and coal is anything but simple. Thermal power plants generate mountains of ash daily, and it's heavily regulated. If not managed properly, it can lead to huge environmental and legal liabilities. Refex has stepped in as an organized player in what's largely an unorganized market. They offer end-to-end solutions, bringing scale, technology like GPS tracking for their massive fleet, and, crucially, regulatory compliance. They handle everything from managing coal yards to transporting ash and even repurposing it for things like road construction. Large power plants prefer to focus on their core strength. They happily outsource this complex, capital-intensive and critical operation to specialists. Refex commands premium pricing because they solve a major problem and mitigate significant risk for their clients. It's a vital, sticky business, completely transforming what might seem like a dull sector into a growth engine. But the story doesn't stop there. Refex isn't content just moving ash. They've also plunged headfirst into the electric vehicle services market with Refex e-wheels and even wind energy manufacturing. This is where things get intriguing. Their EV fleet grew from virtually nothing to over 1,300 vehicles in just over a year. They're targeting a whopping 5,000 EVs by 2027. And just recently, they also bagged a massive 750 crore order from Torrent Power for wind turbine generators. Sounds incredibly ambitious, doesn't it? But here's the suspenseful part. Are these genuine growth levers about to catapult Refex into a new league, or are they just expensive experiments waiting to drain capital? After all, their EV segment is currently loss-making. And, adding to the mystery, they were recently involved in a highly public deal to acquire EVs from Gensol Engineering, which, thankfully, they backed out of just before Gensol became embroiled in a serious fraud probe. This is where investor skepticism needs to kick in. The Gensol incident, while a testament to their crisis management, does make you wonder about their initial due diligence. And for these new segments, the financial reality